Good evening, everyone. Thank you for joining in today. So, today we are covering a very interesting company called Five Star Business Finance. And so, little about Five Star before we get started. I think one of the major segments in which money is made, especially in the fintech space, is lending, right? So what we have seen in the past is that any company which starts operating in the fintech space ultimately gets to lending to be able to make money. And this is a very interesting company which we will be covering in today's webinar. Five Star is essentially a 40-year-old company, and it is based in Chennai, with majority of its operations in the southern part of India. But today, what we'll discuss is what makes Five Star such a different business, and why is it something that because lending is a age-old business, right? There is nothing new. Lending is very simple. As an organization, वो किसी से पैसे लेती है and then आगे किसी को पैसे देती है, and whatever is the differential between what it lends at and what it raises funds at is what is how they make money. So how has Five Star become something different, or what has Five Star done new in the lending space itself that it warrants a entire webinar from us? And that is essentially what we'll cover today. It is a very interesting company. So we'll take about 15-20 minutes to cover the operations, to cover the specificity of the businesses, the uniqueness of the business, the IPO plans, the valuations, and then we will move on to a Q&A session for the next 5 to 10 minutes to cover any queries which you might have. The comment section is live, so any queries which you have, you can keep on posting there, and our team will keep on responding to them. And at the end of the entire session, I will take up all of the questions which you would have posted by then. Right? So let's get started. It is going to be a very interesting ride. It's a very interesting company which we have done a lot of research on. So I hope you guys have a wonderful time understanding this unique company. So getting started. So before I think we get started, let's have a lay of the land. So everyone knows credit in India is very low. So there is a huge gap when it comes to credit, which is available for MSMEs, which is available for even general public, even for their personal needs. But just to get an idea of how does India compare with other economies, in USA, 77% of the population had borrowed money, and out of that, 68% had borrowed money from formal sources. When we say formal sources, we mean banks, lending institutions, NBFCs, credit card companies, anyone who's lending on a formal basis. When you compare these figures for India, only 42% were able to buy money, to borrow money, and out of that 42%, only 8% were actually able to borrow money from formal sources. So this actually shows you how big the credit deficit or the credit gap in India is in terms of how many people want to borrow money and what people are actually able to get money from formal sources. So what is the problem in informal sources? Let's first understand that. So informal sources is basically money lender, uh, unofficial methods wherein they charge very high interest rates, they take very high collaterals, and basically it's a bad mechanism wherein it is not sustainable for anyone, right? And once you come to the formal sector, you're able to get it in a more legalized manner, you're able to get it at a reasonable rate of interest, and therefore this number, wherein the number of people who are borrowing from the formal sector really needs to go up in India, right? So this is the backdrop of an overall credit space as far as the Indian economy goes. Now let's see MSMEs specifically. So what are MSMEs? MSMEs are basically micro, small and medium enterprises in India. So India has, obviously it has the Nifty 50 companies, which are the very large companies, well-run corporate houses, which contribute to a huge portion of our GDP. But India is one such unique country wherein there is a large portion of the GDP or large contribution to the economy which comes from small enterprises. When we say small enterprises, it basically means your small kirana shops, small outlets, textile manufacturers, anyone who's operating in a very small scale. And as per current estimates, there are close to 63 million MSMEs registered in India. This segment is so huge that it contributes to actually 30% of India's GDP and close to 40% of India's total exports. It creates an employment for 110 million people in the country. So this is how large the MSME space is in India. And this graph below gives you a split of how MSMEs are distributed within different states in India. Now, why are we suddenly talking about MSMEs? Obviously everyone knows that MSMEs are a very, very large part of the Indian economy. They obviously employ a lot of people. They are one of the largest contributors to India's GDP. But why are we covering this in a session on five star? So this is how we see the MSME space. So if you see the MSME space, if you look onto the graph towards the right of this PPT, in FY17, the entire MSME demand for debt stood at 69.3 trillion as per IFC's report. Out of the 69 trillion rupees of demand for debt, only 10.9 was serviced from formal sources. Again, formal sources meaning banks, NBFCs, and any lending institution. And the remainder 58 trillion is actually being serviced only from the informal sources. Or this is what we can actually call a credit gap, wherein if there is some institution which comes in and plays its card right or designs a correct product for this particular segment, it will get a very big acceptance from the market. Since FY17, this credit gap of 58 trillion has actually gone up to 90 trillion. And the total demand for MSME credit till date stands at close to 99 trillion. So what this means is only 20% of the overall demand for credit in the MSME segment is met from formal sources. The remainder 80% of the demand for credit from MSMEs is going unserviced by the formal sector. And this is what we refer to as the credit gap. And this is the interesting space in which five star functions. So now let's introduce uh, to you five star, the company which we are going to cover today. So five star is basically an NBFC. Now what is an NBFC? NBFC is a non-banking financial corporation. So NBFC is an entity which is authorized by the RBI or licensed by the RBI to collect money from institutions and then to be able to lend it out to businesses, individuals, and so on and so forth. So what does five star do essentially in the NBFC line? It provides secured business loans to micro entrepreneurs and self-employed individuals in tier 3 to tier 6 cities. And most of these institutions and most of these people to whom five star lends are largely excluded from traditional financing institutions. So basically ये वैसे लोग हैं या ये वैसे businesses हैं जिनको banks या formal credit providers आज के दिन पे सर्विस नहीं कर रहे थे. तो एक बहुत ही नीश सेगमेंट है ऑफ पीपल जहां पर फाइव स्टार ने अपना बिजनेस बनाया है. And it is not available in tier 1 tier 2 cities, so it will not be available in cities like Mumbai, Delhi, Calcutta, Chennai, because this is not their target market. Their target market is very small cities which is in the fringe areas which are just up and coming. And in here also it is trying to loan out to self-employed individuals or micro entrepreneurs. And even when they are doing this, they are doing a completely secured lending. So this is the very small segment which five star has been able to crack for itself. And this is what makes it so interesting to study five star and its business model. Is it has cleared up a very, very niche space wherein it operates. So coming to a little background of the company, they started in 1984. So it's close to being about 40 years since Five Star has been operating, and it started with a focus on consumer loans and vehicle finance. But in 2005, it shifted its focus. So from 1984 to 2005, the focus was more on consumer loans and vehicle finance. In 2005, it shifted to the current segment which it majorly services, which is small business loans, छोटे business outlets, uh, kirana dukan, छोटे manufacturers, छोटे retailers, छोटे distributors, and they give a very small loan ticket size. So their average loan ticket size is of 3 and 3.5 lakhs. and their entire loan range is anywhere from 2 to 10 lakh rupees. So therefore, this shows that they are very well spread out. They are not servicing to a very concentrated group of people. They are servicing to a large number of people, and they're keeping the average ticket size of every loan very, very small. Now, coming from 2005 to 2021, Five Star has increased its AUM or loan book immensely, and we will come to the growth numbers a little later. But as of March 21, it had a loan book of close to 48 billion INR, and majority of its loan is concentrated in the southern part of India, majorly coming from four states, which is Tamil Nadu, Karnataka, Andhra, and Telangana. So this gives you a overall understanding of how Five Star is, how it started, where it is, when did it change its business model, and where does it stand right now. Now let's look at what does Five Star do differently. Now, as we had discussed, lending is not a new business. इसमें कुछ भी नया नहीं है. The lending has been done from, it is probably the oldest business. Banks have been there for the last 150, 200 years. तो फाइव स्टार ऐसा क्या अलग कर रहा है that it has been able to build a name for itself. It has done extremely well in the pre-IPO space. It has received backing from some of the greatest investors which are there on the earth today. So the first is what we discussed. It has carved out a niche for itself. When I say it has carved out a niche, it means that they don't service everyone. They will not service corporates. They will not service large businesses. They will not service tier one cities, because these are already very matured and saturated markets. यहाँ पे there is ICAI Bank, HDFC Bank. Everyone is lending out to these people. So it focuses on small business owners and self-employed people in tier 3 to tier 6 cities, right? And because of this strategy, is it commands a very high pricing power, and it is able to generate on its loan book close to an IRR of 24%, which is phenomenal by any standard. If you compare this to any other bank, they would generally generate an IRR of anywhere between 10 to 16% basis their split. So एक बैंक से जब हम compare करते हैं, Five Star is able to generate on its loan book a IRR of close to 24%. Now, once this loan is getting distributed, how do you ensure that you're getting their money back? Because छोटे बिजनेस में लेंड करने में चैलेंजेस भी उतने ही है. आप जब बहुत ज्यादा अपना लोन बुक स्प्रेड आउट कर लेते हो तो कलेक्शंस बिकम अ चैलेंज या सिक्योरिटी बिकम्स अ चैलेंज. तो इसको एड्रेस करने के लिए फाइव स्टार ने दो चीजें की है. लेट्स कम टू दैट. द फर्स्ट थिंग इट हैज डन इज इट इज फुल्ली बैक्ड बाय हार्ड कोलैटरल. सो इट डज नॉट डू एनी अनसिक्योर्ड लेंडिंग. ऐसा नहीं है कि उसने खाली पैसे दे दिए एंड उसने उसके अगेंस्ट कोई एसेट गिरवी नहीं रखी. So what Five Star does uniquely is 95% of its entire loan book is backed by self-occupied residential property. तो जो भी बिजनेसमैन या इंडिविजुअल का घर को वो लोन प्रोवाइड कर रहा है, उनका जो सेल्फ ऑक्यूपाइड रेसिडेंशियल प्रॉपर्टी होता है, दैट इट टेक्स एज कोलैटरल, and it gives a loan to value ratio of only 50%. So just for example, किसी के पास अगर घर 10 लाख का है तो Five Star will only give him a loan of 5 lakh rupees. Therefore, even if there is a drop in the asset prices, Five Star is completely backed, and it has a huge collateral which it can use in case it is not serviced. Third is risk management. Now, what Five Star has done is it has created a very sophisticated, technically backed, uh, reiterated and improved over time method of underwriting. So underwriting is basically selecting कि मैं अपना loan किसको दूंगा. And the way Five Star has done this system, it has been able to maintain a NPA of just 1.5 to 2%, which in the segment in which Five Star operates is phenomenal. In general, अगर आप बाकी banks का देखोगे, good banks operate on a NPA of anywhere from 2 to 2.53%, and NBFCs wherein they are lending at a IRR of 24% to small business owner, the NPA can go as high as 4 to 5 to 6%. So the fact that it has been able to maintain a huge IRR, grow its loan book, and still keep its NPA down is is the reason why five star is where it is, right? And lastly, what it has been able to do is, so एक एनबीएफसी है, उसको दो चीजें करनी है, पैसे उठाने हैं एंड पैसे किसी को लोन आउट करना है. तो लोन आउट तो हमने समझ गया दैट इट इज डूइंग अ फिनोमिनल जॉब. to the people who it is loaning out the funds. But what it has also been able to do is it has really diversified and it has been able to have a very cost effective long term financing. So five star जो पैसे loan out कर रहा है, that also it has secured from a variety of diverse sources, and because of its well run company, it has been able to do that at a very nominal rate or a very efficient rate. So, if we can take a step back and understand an NBFC, there are three things which generally are used to evaluate a NBFC or any lending company for that matter. One is net interest margin. NIM is basically जिस रेट पर एक लेंडर पैसे उठा रहा है एंड जिस रेट पर वो आगे लेंड आउट कर रहा है उसका क्या डिफरेंस आता है. सो दैट फॉर फाइव स्टार इज फिनोमिनली हाई. इट इज क्लोज टू 15%. तो 10-12% पे वो उठा रहा है एंड आगे 24% पे इट इज बीइंग एबल टू लोन आउट मनी. Second is that it should have a low NPA. So which is available here that uska, for 5 star the NPA is only 1.5 to 2%. And third important factor is that the loan book growth should be quick. And if it is able to maintain a book which grows quickly, which gives them a high return, and they are able to do it without NPAs, then that lender is gold. And the last 10 years or the last 5 years of five star really show you that it has been able to excel at all three of these parameters, and which is why it has become one of the favorite stocks for a lot of institutional investors. Let's see what it has done differently apart from what we have covered. So why has it been able to charge close to 24% IRR is because for the people that it is servicing, it is an exclusive financier. उन लोगों के पास लोन लेने का कोई दूसरा जरिया ही नहीं है for 75% of the people, and this is the reason that it has been able to command an IRR of 24%. Its AUM has grown from at a CAGR, at a compounded annual growth rate of 73% since FY17, which is beyond phenomenal, which is, I think, the best which I've seen for any NBFC till date, and doing it so beautifully. Third is, like we covered, it has a excellent underwriting process. And fourth, it has an extremely efficient on-ground collection process. So first is when it is writing loans, it has a very sophisticated process. And once it has disbursed the loan, जब loan collection का समय आता है, even then it has been able to very effectively collect those loans back from the customers. Now let's see some operational highlights. This is a very interesting slide. So if you see the growth numbers, you will really be surprised. So if we compare FY15 versus FY21 for 5 star business finance, the number of branches has gone from 40 to 270 close to. So it's more than a 5x, 6x growth in the number of branches in just 5 years. The disbursement has gone from zero point 0.8 billion INR to 48 billion INR, which is I think close to what 5x, no, more than 5x, yeah, close to 5x. Assets under management has gone from 1.3 billion to 44 billion. The average ticket size has stayed the same, which is, I think this is even more phenomenal कि इसका loan book तो बड़ा है. So it has been able to grow its loan book from 1.3 billion, 1000 crore से 44,000 crore पे ले जा पाया है, but it has kept the average ticket size the same. So therefore, what this proves is कि it has not over given or not over loaned out to the same set of clients, and उसने अपना client base ही increase कर दिया है. So keeping the loan ticket size same and still being able to increase the entire loaning, the number of customers which you have is really something which helps in terms of the quality of loan book which the company has. Net worth obviously has gone up. OPEX to AUM ratio has again reduced. So OPEX is basically operational expenses and AUM is what the asset under management is. So as the AUM increases, the companies are generally able to reduce their percentages. And as this percentage goes down, so does the profitability go up. So 6.5% खर्चा करती थी company in correspondence to its AUM in FY15, which has now gone down to just 4.34%. And the last parameter, the GNPA, this is the one which I love as far as banking stocks goes. So 5 star has a gross NPA of only 1.02% as compared to 1.8% earlier. So even though its loan book has gone up, it has still been able to reduce the number of people who have not paid them back, which I think is very, very important when you evaluate a lending company. Now, even if you see the loan portfolio, it has 70% of its loan is given to secured businesses, which we talked about earlier. So छोटे business को loan देते हैं and उनके self occupied residential property से उसको secure कर लेते हैं. Mortgage loan to small businesses is 24% and small ticket housing loans is 6%. Now, these are not loans for businesses, but these are loans to either modify or renovate or buy a house. Now, operationally, I think we have seen that it has done phenomenally well. Now, let's see how it has done in terms of revenue. So, in terms of financial figures, FY17 it had a top line of 80 crores. FY22 it has a top line of more than 1254 crores, which is a CAGR of 72%. Now, not just the top line, even the bottom line has grown for Five Star in a similar tandem. So इसका top line गया है last 5 साल in terms of CAGR at 72%. However, its bottom line has grown at 81%, which is again too good to be true. So the PBT has gone from just 30 crores in FY17 to more than 600 crores in FY22. And what is even more amazing is it has really not seen any uh, major loss or major fall in profitability because of COVID. Neither has the top line, neither has the bottom line. So it means that even during COVID and even during the pandemic, Five Star was able to loan out to more people and it was also able to keep up with the collections and therefore not having such a very high NPA, which a lot of other lenders and a lot of other NBFCs really struggled with during the COVID period. Coming next to the peer comparisons, I think this is something which we have already covered. So Five Star has a very nice split of the growth, the interest which it makes on every loan or the yield which it has on every loan and the NPA which it has. So NPA it has been able to keep very low. Net interest margin, which is the differential on what it loans out and what it raises at, is very high. ROE is at 16.8% and it has been able to maintain its capital adequacy ratio, which is basically how well capitalized a bank is, at a very high figure of 58.9%. Great. Coming to the shareholding and the fundraiser. So Five Star is actually backed by one of the, and this is the final point for an investor which makes Five Star very attractive, is Five Star has raised close to 2000 crores from the leading private equity groups like TPG, Matrix, Norvest, Sequoia, KKR, TVS. The promoter holding is currently close to 20% and the rest 70% is held by private equity firms. In March 21, they had done their last fundraising at a valuation of 10,300 crores. Now let's come to the IPO updates. So how has the IPO coming in? How is the IPO shaping? So in November 21, around a year and a half back, is when uh, I Five Star had filed for its DRHP. So DRHP is basically the document which a company files when it is seeking approval for an IPO from SEBI. So DRHP file karna padta hai as a first step to get a approval on its IPO. So this had happened back in November 21. In Jan 22, Five Star got the approval from SEBI to be able to raise the entire capital which it was planning through an IPO. So this Five Star has already received an approval for its IPO now. So I think why there is a delay or why even after the approval the IPO has not come is majorly because the overall market conditions and the macroeconomic factors are a little poor. So possibly the company is waiting for the macroeconomics to get better, market sentiment to get better before it comes out with an IPO. And this lot is actually an entire offer for sale. So no money will go into the company. The existing investors will be able to get an exit. And this is, I think, primarily the funds which most of the investors are exiting at. So TPG is exiting at for 1350, Matrix for 570, Norwest for 385, and so on and so forth. Great. Now I think we have covered everything. Why, how is India's credit space? What is the gap? क्या स्पेस ऐसा था जहां पर आज के दिन देयर वाज अ गैप एंड व्हाट फाइव स्टार इज ट्राइंग टू कवर. अब वो कवरेज फाइव स्टार करते हुए हाउ और व्हाट आर द थिंग्स व्हिच इट डिड वेल. Now we have also covered who its shareholders are. Now let's understand how the valuation is playing out right now. So valuation wise, The last fundraise by Five Star was done in March 21, and it has raised 1700 crores at a valuation of close to 10,300 crores. And this happens to be 1 year, 3 months earlier. The pre-IPO market cap for Five Star is, however, at 14,800 crores, which is close to, I think, 40% higher than uh, their last pre-IPO fundraise or their last institutional fundraise. At 14,800 crores, this will give you a rough valuation of price to book at 4.02x and a price to earning at 32x. Now, if you understand this valuation, a price to book of 4x is not low. So I will not say that Five Star is available at a cheap price or it is available as a value stock. If you compare this to banks, banks are available at a price to book of anywhere from 2 to 3. For companies like Bajaj Finance, they might be valued higher because they grow faster. So that might be from anywhere from 5 to 7. So I think Five Star is valued at a higher end of the valuation scheme. So it is at 4x. But what happens is when a loan book grows so fast, so like we saw that in the last 5 years it was able to grow its loan book at 70%. That is the reason why investors are able to justify this loan book, because they know that within 2 years it will again be able to do a 50% increase in its loan book, and therefore at that point this valuation will become very logical, right? And in terms of price to earnings, it is at a 32 times valuation of its net back. Now let's see the performance in the pre-IPO space. So I think what we'll do is we'll just go to the website and see this graph. I think that will give us a better idea. So just let me log on to the trade platform. There is some trouble with the internet. But I think there is some trouble with the internet. So let's see this here itself. So how has the pricing for pre-IPO or for Five Star been in the unlisted space? So it started in close to August at around 200 rupees, and since then it has been a very steep climb up till 700 rupees in the last 1 year. Post that, once the market also started rationalizing, it started falling from 710, and currently it is available at a rough pricing of anywhere from 500 to 520 rupees per share. Great. I think so. This covers primarily what we wanted to cover and what we wanted to distribute as a part of the understanding of the Five Star company, the NBFC space, and the pre-IPO space. We can take any questions which you have now. So let me just move to the chat. Great. So we'll be open for questions for another 10 minutes. So if there are any questions which you would have on Five Star or in the unlisted space per se, do type it out in the comment section and we will try and answer the same. So the first question is, what is the current EPS? So the current EPS is at around 32 times, like we covered earlier. So I think roughly EPS is around 16 rupees. Value per share valuation is around 510, which will give you a price to earning of close to 32. And I think on a diluted basis, the EPS will stand at 15.9. Cool. ROA. ROA for Five Star, I think, will be close to 8 or 9%. I think I had covered that in one of the slides. Let me go back to it. Yeah, here it is. So the ROA for Five Star is close to 7.1% on its assets. The ROE is at 16.8%, and the NIM is at close to 15.1%. So I hope that answers your question. The next question is, at what price will the company be listed? So I think giving a listing price will be a little difficult in the sense that the current market valuation is at close to 4x of its book value, and they did the last private round at 10,800. So generally, from the last round, they get a exit of close to 60-70%, and the last round happened close to a year back. So hopefully by the time it goes for an IPO, it will be at least be able to give a 60-70% return to its pre-IPO investors. There are many small finance businesses. What would be the position of Five Star? So I think small finance businesses are there, but what we liked about Five Star was the fact that they operate in a very small segment, and it is very focused on small businesses with very secured lending, which actually helps it to be able to get a much better uh, return on its loan book, and also be able to keep it at a very efficient in terms of collections. So the Five Star actually has a very great collection process, and it is able to keep its NPA very low. I think that is what is critically different from other small finance businesses which I have seen. uh, how much price increase can we expect in the coming future? I think we've already covered this. When can I expect an IPO? I think IPO is definitely expected within the next 1 to 2 years. So they had already filed their DRHP, and they have already received an approval. So I think it is just a matter of getting the right timing which the company is looking for. And once I think the timing is right, they will definitely come out with an IPO. How does the company compare with listed NBFC peers? Yeah, so I think if you see the listed space, I think primarily if you look at Bajaj Finance, or if you look at the other NBFC companies, the good companies with excellent growth paths would value themselves at anywhere between uh, 5 to 7x or 5 to 8x of the price to book. Compared to that, Five Star is available at a slightly more logical valuation of 4x its book. So while it is not very cheap, it is, in terms of its growth rate, it looks to be valued in the right manner. Is it 5 year average ROA or just for the current year? No, I think it's for the current year. So all of the data which we had mentioned was for the last year. Great. Uh, Great. So I think this was the questions which we had. Uh, Thank you for joining in. It again was a pleasure to give you this small webinar on Five Star. And in the next couple of weeks, we'll come up with new companies in the pre-IPO space, and we'll cover those for you. And any specific company which you want to cover us, put it in the comments below, and we will try and take it up in the next couple of videos. Thank you, and have a great weekend. Cheers.